In this video here, I'm going to show you an approach that's going to instantly improve your trading results, particularly if you day trade the markets. Now, back in the days when I used to do a lot of day trading, this is a technique that first of all kept me out of a lot of trades that really stood no chance of making me any money, but also showed me turning points in the markets that were actually unbelievable as to how accurate they could be. Now, just to give you a little bit of a background, any currency pair, stock, or commodity that you're trading will typically have something called an average daily range. And what that is the range that it typically is going to trade within. So if we talk about cable, pound dollar, for example, you will see that that typically trades within a range of around 100 to about 120 pips. And what that means is when the markets approach 100 pips for the day, then what you're going to get is usually you're going to get some sort of a turning point in the market. So if it's been on a big tear for the day, you've had a big, trending day, that's the sort of point that you're going to look at for some sort of a turnaround. So from a trading strategy perspective, what you would be doing is you go down to like a 1 minute chart or something like that as price approaches 80 to 90% of its daily range, and you start looking for some sort of a price action reversal. What you can also do is you look at that, and if you were looking to get into a trade in the direction of the general trend and you're approaching 80 to 90% of the daily range, and you may say to yourself, well, actually this isn't a high probability trading setup, so from that perspective I'm actually going to skip it and I'm going to look for the next opportunity in another currency pair, or perhaps you just have to close up your screens for the day and come back tomorrow. Now, how this works is let's jump over to the charts for a minute. So I'm on TradingView at the moment. This is going to be available on any major charting platform. I'm going to go to indicators, and in here I'm going to type in average true range. This is the indicator that we want. You can work this out for yourself, but this indicator, it just does all of the work for you. So I'm going to put that in there. Then I'm going to go down here and change some of the settings. Now, it typically comes out at about 14 periods, okay? So if I go into settings here, you'll see the inputs, the length is at 14 periods. So that's, if I'm on a daily chart, which is what I want to use to measure the average true range. So I don't want the average true range of a 5-minute candle or a 1-hour candle or anything like that. I want the average daily range. So I'm on the daily chart here for a minute. What you can do on TradingView is you can actually go in here and change the time frame. So I could say I want the daily range regardless of the chart that I'm on. I won't change that for the minute, but I'll just go here. So we're going to stick with 14 periods. Then in the style, I'm going to change that a little bit just because it makes it easier to see, a little bit brighter for me. Put that in there, change it to circles. And now I can really see where we're at. Now, what you'll see is, generally speaking, the average true range doesn't change all that much over, a period of days to weeks. It's over months and things like that you'll see a big change. So if we look here back, so since sort of April time up until where we are today at recording, so in August, the average true range has been around 98 to 100 pips. If we go back to last year when we had the big moves off the back of the Bank of England raising interest rates and things like that, then we can see that the average true range almost doubled. But going to today, we can safely say that we're in a range of about 100 pips. Now, how is this going to help us when it comes to day trading the markets? Well, let's jump down to something like a 5-minute chart for a minute. Okay, and what I want to demonstrate to you is what happens, and I won't use today because we aren't at the average true range for the day. We haven't completed the day. In fact, I'm recording this at 9 o'clock in the morning. So you typically see these turnarounds later on in the day, sometime around 2-3 o'clock, going into the US session, maybe even the end of the US session. But what I'll do is let's go back over a few days and I'll just sort of demonstrate this to you. So this was yesterday's. Let's see what the true range was for yesterday. High to low. So that was around 73 pips for the day. So that's around 75% of the true range. Now, what we want is we want it to be in the 80 to 90% range before we start looking for a trade, or before we start saying, well, we're not going to take a trade because it's at that range. If we look at yesterday or the day before, there we can see that the average true range, it got up to 110 pips. So again, it exceeded the average daily range. And what you can see here is that once it got up to 100 pips, over here, the market started to turn around. And once it exceeded that, it then turned around again. So the way that you would use this is when the market approached this level here. So if we were looking to take a breakout of this high, all right? So let's imagine, let's go in there. Where's that? That's about 1 o'clock. Let's go down to a 1 minute chart. Let's put in a vertical line here so we know exactly where we are. Like so. Okay, so what we're saying is that 4th of August, 1310. Go down to a 1 minute chart. Find the 4th of August back here. Now, what we would be looking for is we'd be looking for some sort of a price action reversal. Okay, so what we would do, we come to the charts over here. The market gets to its daily range at around 1 o'clock that day. Now, we don't just sell at that particular point because the market is at that level. It's really, really important that you understand that. We're still looking for a price action reversal, which for me will be some sort of a, like a 1, 2, 3 reversal pattern. You can use whatever it is that you like, but from a price action perspective, I like 1, 2, 3 reversals or candlestick reversals. And we actually get that up here. So what you could do is as the market approaches this level here, it gets through the daily range. So this is about above 100 pips. And then the market tries to get higher. It sells off a little bit. It then attempts to get a little bit higher. And what we have here is we've got the 1, 2, 3 reversal. So this is point 1, this is 2, this is 3. And essentially when this low over here gets broken, that's when we would then look to get involved in the market. So we would sell the market here. You go for like a 1-to-1 reward to risk. So we'd have our stop somewhere above the highs over there. We would then look for a 1-to-1 reward to risk ratio. So our entry is in at 1.2772. The stop would be around 10 pips away. So looking for around 10 pips target. And as you can see, within 3 or 4 minutes, you hit that target. Okay. And this is something that will happen again and again and again. So day in, day out. I'll jump out of the 1 minute chart there for a second, but you'll see day in, day out, when the market exceeds, 80-90% of its daily range, there are opportune moments that you can look for, looking for turnarounds in the market. Okay, if we go to the day before and see what this looks like. So where are we? Over here. So we've got the high over here. We go down to the low. What is that? That's 107 pips. And sure enough, what happens? So the market gets to that range, it then turns around and reverses. What happens the previous day? So we go from the high over here down towards the low, that gets to 120 pips, okay? And then you get the turnaround. Now, like I said, you don't just fade the price action because it approaches the daily range. You use the daily range as a support or a resistance level where you're going to look for price action at that level to confirm the turnaround in the market. But it is a sort of dynamic level of support and resistance that really, it could become the bedrock of your trading. So I know some traders that just kind of typically, they only trade the daily ranges. So they'll sit there, they'll wait for that, they'll come to their charts in an afternoon. So it's suitable for those of you that can't trade in the morning. You wait for that daily range and then you look to fade the daily range, okay? So I hope you enjoyed this video. I hope you found value there. For those of you that day trade the markets, I really encourage you to give this a go because it is an awesome way of trading the markets. It's a great strategy in and of itself, and it's also a great way of keeping you out of trades that really you have no business being in because they're not high probability trades. If you don't know how to trade the markets, if you aren't consistent already, then I really encourage you to jump across to my website. I'll post the link beneath the video here. You can sign up for my masterclass where I'll show you a bunch of different strategies. I'll show you what's working now, how I'm trading the markets, all in a bid to try and help you become a consistently profitable trader. If you haven't already subscribed to the channel, please hit that subscribe button, hit the bell so that you get a notification as and when I release a new video, and also hit the like button if you like this video. Okay? If you have any questions, please post it in the comments beneath this video. Otherwise, have a fantastic day and I'll speak to you in the next one. Take care now.